Well, Tiff, I don't know how I'm going to top that, actually, but I'm glad that you didn't ask me to do that dance. It's a little bit much to ask. So I'm just going to start right off and say something that everybody knows, and that's that companies need to innovate to thrive. It just makes sense. But what you may not know is that the same is true for central banks, even though we're the one kind of bank that you wouldn't really expect going out of business or having a lot of competition. But just like private companies, central banks are often focused on immediate issues, short-term things. And it's hardly surprising because there's been a lot that's been thrown our way these past few years. We've had a financial crisis, we've had a great recession, and then we've had the oil price shock. And a central bank exists in the first place to set a solid foundation for the economy and the financial system. And so what's our track record? Well, if you look in recent years, we've kept inflation low, it's been stable, and this has made it a lot easier for companies to recover from the downturn. Working with other authorities, we also avoided major disruptions in our financial system during the financial crisis. And so, given this track record, you may wonder, well, why does innovation matter to the Bank of Canada? Well, it matters because the world is moving really quickly. I mean, who would have imagined 20 years ago that interest rates would be below zero in a number of advanced economies? Or that Canadian dollar assets would be held in foreign reserves? Or that there would be a Bitcoin machine, an ATM, in your local pub? Well, confident as we are in how we do things now, the bank keeps its eye on the future. Failing to do so would be a mistake for our business, and it could have real negative consequences for the Canadian economy. It's important to realize that innovation for us isn't just about reacting to the most recent crisis. It's also about pushing ourselves so that we're ready for whatever the future holds. And that's why I'm really happy to be here this morning, even though it's only 8 o'clock, but you guys have coffee and I don't. But it's because the Rotman School of Management and the Munk School of Global Affairs are world-leading organizations, and people here are passionate about innovation. So the students here know that to stay ahead of the curve, you need to have a plan. And the Bank of Canada has a 3-year plan that we're putting in place, and that's what I want to discuss today. And I'm going to start by talking about how our plan continues the tradition that the Bank of Canada has of innovating. And then I'll go over some of the tough policy and research questions that we're going to tackle. It's going to lead me to explain how we'll get past the obstacles to new ideas by changing our corporate culture. And finally, I'm going to ask you, and all the people who care about what the bank does, to get involved in a constructive dialogue. Well, the Bank of Canada was itself an innovation when it was created during the Great Depression to support the economic and financial well-being of Canadians. And over the past 80 years, the bank has done exactly that by carrying out 4 main lines of business. You all know about our monetary policy role because you read about how we set interest rates to return the economy to its potential and to meet our inflation target of 2%. In our financial stability role, we monitor the health of the Canadian financial system and we act as lender of last resort. And one example of this work is the extraordinary liquidity that we provided to the system during the 2008 crisis. And Tiff mentioned that I was in the financial markets department then, and I can just tell you it was a happening place, and we were innovating, if I could put it that way. We're also the federal government's fiscal agent, and that means that we manage about $650 billion in federal government debt and around $70 billion in foreign reserves. And finally, and last but not least, we're responsible for the banknotes in your wallet. And what's really interesting here is that more work goes into them than you might imagine. We've got to develop new security features. We have to combat counterfeiting. We need to research new trends in electronic payments and digital currencies, and I'll talk a little bit about that in a minute. So those responsibilities, combined with a balance sheet of nearly $100 billion, put the bank at the heart of the Canadian financial system. And even though the bank has had the same mandate for the last 80 years, we haven't been afraid to innovate, to change our paradigm when circumstances demanded it. The change in monetary policy is quite stark, actually. Under the Bretton Woods system, which some of you may remember, it prevailed after the Second World War, and the US dollar could be exchanged for gold at a rate of $35 per ounce. That's US dollars per ounce, but still seems kind of cheap, huh? And other countries pegged their currencies to the greenback. Now, in 1950, Canada was a bit of an international rebel when it became the first industrialized country to adopt a floating exchange rate. Well, Canada returned to the fixed peg in the 60s before letting the dollar float for good in 1970. So the Canadian dollar floated for good in 1970. And believe it or not, letting markets determine the value of the currency was revolutionary at the time. Now, that didn't solve all our problems, to say the least. Inflation became rampant. For a stretch of more than 20 years, it never fell below 2%, and sometimes it exceeded 10%. And interest rates, as a result, just exploded. For a few months in the 80s, homeowners paid more than 20% on a 5-year mortgage. I don't know how many here. I'm seeing some nodding, so some people remember that. It might have been a painful experience for some. And the bank had to react. Its leaders knew this beforehand and had researched alternative monetary policy regimes. And in central banking, just as in business, it's not any different. It can take a long time to bring an idea to market. It took about a decade to develop the inflation targeting regime that we adopted in 1991. And inflation targeting seems like an obvious choice today, now that it's been replicated in all major advanced economies. But when we started studying it, many economists would have told you that it was unworkable. Not afraid to innovate, we were the second central bank in the world to set an inflation target right after New Zealand, and it was a few years, actually, before the idea of inflation was fully accepted by the Canadian public, and the bank took a lot of heat for it. And these days, most central bankers see inflation targeting as a success, and it's not surprising. It's credited for contributing to what we call the Great Moderation, and that's the 25 years or so before the financial crisis when performance of advanced economies was unusually good. And I wish I could say this was the end of the story, but in reality, this success probably distracted central banks from confronting the hard questions about the buildup of financial risks that led to the global crisis. And it's a stern reminder that we must resist confirmation bias and complacency. If the bank's history teaches us anything, it's that we must always be ready to consider questions that challenge our old answers. So how do you do that? Consider questions that challenge our old answers. Well, you give innovative thinking a central place in our strategic plan, and you create a corporate culture that fosters different perspectives and challenges the status quo. A former Governor David Dodge once said something to bank staff that really struck me. He said, "We can have clashes of ideas in the bank, secure in the knowledge that there are no winners or losers. What we're doing is exploring aspects of an issue." And this is just so true, no matter what business you're in. So I'm going to turn now to what's in our plan. The Bank of Canada remains committed to inflation targeting and to the expert execution of all its responsibilities. We're also committed to exploring how best to contribute to the Canadian economy in a world that's going through fundamental structural change. It's in this context that the bank's seeking to advance the frontiers of all its business lines. So let me focus right now on monetary policy. The current inflation targeting framework is working well, and so the bar for change is high. But history tells us that we can't cling indefinitely to a particular way of doing business. And one important challenge that central banks now face, in many of them, is that conventional monetary policy is stretched to its limits in many countries, and where policy interest rates are at or below zero. And because of this, a number of countries are using innovative monetary policy measures to return inflation to target. Canada was fortunate to avoid the worst of the crisis. And why is that? Well, it's thanks to the relative strength of our economy, our prudently managed and resilient financial system, and then there's the well-anchored inflation expectations. And Tiff Macklem, my predecessor and some of your dean, he could take a lot of credit for that. So it's not surprising that we're focusing our research firepower on monetary policy lessons from the crisis. And the first lesson is that we have to be innovative with the instruments we have in our monetary policy toolbox. Structural changes, they've reduced the economy's potential to grow without creating inflation, so potential output growth is lower. And as a result of that and other things, the neutral rate of interest is lower than it was before the crisis. And that means that if we continue to target 2% inflation, it's more likely that the policy interest rates will fall to zero than it was in the past. And remember, only a few years ago, many people believed that zero was where monetary policy was out of bullets. Well, we now observe in many European countries that they're testing this limit. And their central banks are charging commercial banks, they're charging them for their deposits, and governments are effectively getting paid to borrow. We published today on our website an interesting staff paper that looks at the experience of negative nominal interest rates in a number of countries like Denmark and Switzerland. And it finds that the cost of securely storing cash is the main constraint on how low rates can go in these countries. Now, it's too early to tell how effective negative interest rates are at creating additional demand. However, it seems in the experience of these countries, the exchange rate channel might be particularly important. Our staff, along with many other central bank researchers and academics, are also assessing how effective other innovative monetary policy measures have been. Today, we're also publishing other staff research papers that cover some of these issues. Now, the Banque du Canada was one of the innovators when we used a tool called forward guidance. And that's when central banks communicate their intentions on the path of the policy rate or other policy actions. And the evidence from our staff work shows that forward guidance, when it's clearly communicated and credible, can be an effective policy tool. And it probably works best when it's reinforced by other policy actions. Other innovative tools that central banks have experimented with to ease monetary conditions are different kinds of asset purchase programs. You've probably heard about quantitative easing. And we studied the experience of the United States, Europe, and other countries like Japan. And what these central banks are doing is designing their asset purchases based on the part of the market that they want to affect. So to lower yields further out the curve, some are purchasing long-term government bonds. Or to improve credit conditions in a particular area, they bought distressed assets like corporate bonds and mortgage-backed securities. And our research found that these purchases were successful in affecting yields. Research in this area, it's not done. I mean, we're still studying the Great Depression, so I guess it will never be done. But this is unique in the sense that the situation's still unfolding, and it's going to take years to understand the effects of these innovations. And so research at the bank and in other central banks and academia is going to continue for a while. So the second lesson from the crisis is that policymakers must consider the risks and vulnerabilities in the financial system when setting monetary policy. In the lead up into the crisis, the world economy was bolstered by what I'll call financial tailwinds, easy credit conditions and other things that were poorly understood. In its aftermath, the global recovery is being held back by financial headwinds, like balance sheets are not in good shape. And we also don't really understand those either. And so to address this blind spot, the bank is making a big investment in economic modeling. The Banque of Canada has a long tradition of taking models seriously because economists use theoretical and statistical models to forecast the future and to study different policy scenarios. And this discipline is good because a good model allows us to isolate the cause and effect relationships at play in a complex system. And we have a number of workhorse models. One is called the Terms of Trade Economic Model, and they do a good job of assessing the impact of economic shocks. But they can't really handle the behaviors of market disruptions that give rise to financial crises. And so this is an area where we're pushing the frontiers, and it's a big challenge. If anybody here is a modeler and has tried to model these things, you know it's a big challenge to integrate the financial sector and its interactions with the economy in an economic model in a realistic way. And it's even more difficult when you consider the fact that finance is being transformed by technological and social trends, as well as the regulatory reforms that we've put in place post-crisis. But this effort will yield a big payoff to public policy. Let's just give you an example. Our models will inform the discussion with our federal partners about the right mix of policies that authorities should use, whether they're monetary policy, fiscal policy, or macroprudential policies. So for us, we need to understand better under what circumstances it would be appropriate for the bank to use monetary policy for financial stability purposes. Models are just the starting point. No model can give the whole picture, and that's why we engage the outside world to gather some of the missing pieces, both here and abroad. And this allows us to ask the right questions and apply our judgment. Innovation doesn't stop with simply adapting our theoretical frameworks and gathering information as we see the world today. We must also challenge our thinking by contemplating alternative futures. So what does that mean, alternative futures? Well, take an example. The international monetary system could look completely different 20 years from now. China is increasingly opening its financial markets and liberalizing capital flows with the rest of the world. And while this is a clearly positive for the global economy, it's a huge change, and the transition could be bumpy at times. And that means that we need to think about how the world financial system will evolve and what Canada's place in it will be. Will the yuan become a reserve currency? How would that affect the demand for other reserve currencies like the US dollar or the Canadian dollar assets that fund managers are buying? So another thing, global and domestic payment systems. That's the backbone of the financial system that no one notices when it works well, but everybody notices when it doesn't. So technology is advancing, and new players like PayPal and Apple Pay are competing with the traditional ones. The bank is going to help lay the groundwork for the next generation of Canada's payment systems. Well, then there are disruptive technologies. Got a pretty young audience here, and so I know you've heard about all these. We've got the distributed ledger that's at the heart of Bitcoin. We've got peer-to-peer lending facilities like the Lending Club. And these developments are pushing more and more financial activity outside the traditional financial sector. The sharing economy is upending entire industries. Here I'm thinking about peer-to-peer home rental services like VRBO or mediated services like Uber. These types of trends raise questions for the bank. I mean, consider a cashless society. You don't have cash anymore. Everybody uses e-money, and here when I think about e-money, I'm thinking about monetary value that's stored electronically and not linked to a bank account. If this money were denominated in Canadian dollars, who should issue it? Who should earn the seigniorage? The central bank as it does today, or the private sector? The bank needs to consider all these questions. Cash is a public good that many still prefer, especially for small transactions. as we think about alternative futures, we have to envisage a world in which people mostly use e-money, perhaps even one that's not denominated in the national currency, like Bitcoin. This would create a new dynamic in the global monetary order, and one in which banks, central banks, quite frankly, would struggle to implement monetary policy. And central banks in this kind of world, which seems unlikely but could happen, couldn't act as lenders of last resort like they do for their own currencies. And so it means that households and businesses could suffer important losses if such an e-money were to crash. We need to anticipate this, think about this, and manage the risks and the benefits that could arise from a broader adoption of e-money. So the bank is going to explore these and many other trends in the course of our 3-year plan. And to do this, we're expanding the range of techniques we're using for analysis. And I find this part really exciting. Now, one example is that we've begun to capitalize on big data to do things that aren't possible with traditional economic statistics. So prices collected from retail websites can be used to study pricing behavior. Social media, where people of all ages express likes and dislikes, may become a vital source of data to understand the perception and credibility of monetary policy. We're also drawing on techniques from behavioral economics, which borrows a little bit from psychology. And we're doing this to study things like, how do people form expectations? What are the kinds of factors that determine the adoptions of a payment technology? So if we don't start now to find new approaches to handle these and other alternative futures, we're not going to be prepared for whatever the future throws at us. So our strategic plan focuses on new ideas, and I hope you find them as exciting as I do. The thing is that if we want the new ideas to match our ambitions, we need the right corporate culture. And no matter how successful it is, any business faces natural obstacles that can get in the way of innovation. That's why the bank is being proactive to make sure they don't get in our way. So what are these? Well, the first obstacle to innovation is homogeneous thinking. It's human nature to have affinity with people who think the same way and use the same jargon. I mean, I think that's where all the lawyer jokes come from and the economist jokes. But the echo chamber that you create, it's limiting. And people at Rotman and Munk know you often have to look outside your own industry to find ways to improve. And we certainly did this during the financial crisis with the creation of the liquidity facilities. It involved economists, market experts, IT specialists, lawyers, accountants. And one area I find very interesting in the bank is how our scientists in the currency department cast a wide net as well when they develop new security features for banknotes. And just a little example, a few years ago, they turned a material that is used in cancer therapy research into a machine-readable security feature. And we got a patent for that. So the second obstacle to innovation is that people generally avoid conflict. Who here likes conflict? Who likes to be in conflict? Ah, there, the reporter, David. So, not everyone enjoys being at the center of debate or playing devil's advocate. Having smart and entrepreneurial people is critical to generating innovation, but it's not sufficient. You must also have a culture that values inquiry and encourages people to speak freely. There's a lot of wisdom in the concept of integrative thinking proposed by Roger Martin, and often two ways of looking at a problem can offer insights. And leaders of an institution have to give the example. Good leaders, they have flexible minds, they're open to being challenged. They take time to listen. They look at all facets of a problem to come up with the best strategy, and they don't step on newly sprouted grass too early. So we've added innovation as a formal topic of discussion at our senior leadership meetings. surprising. Some of us are a big room full of economists and professionals, and we don't just talk about economics. And we've put innovation at the heart of our leadership expectations. And these expectations are being integrated into our leadership training and embedded in performance management, recruitment, and other management practices. And practically speaking, this focus will translate into our managers spending more time with their employees and on their employees' ideas. Leveraging our most important asset, our people, will spur creative ideas and diversity of thinking. And we're also implementing new practices to help staff assess the kind of alternative futures I was talking about. So we're developing an innovation lab for cross-functional groups to assess the implication of what I like to call low probability, high impact scenarios. And I expect that this inquisitive black hat perspective will benefit our everyday operations as well. So the last obstacle to innovation I'll mention is aversion to risk, which is common among central bankers, and it's understandable. Given our responsibility as economic stewards, it's completely understandable. There are no takebacks or write-downs in central banking. That said, we can't escape the fact that innovation entails risks. A company that creates iPads or iPhones will occasionally produce a Newton. And Mark Zuckerberg had it right when he said, in a world that's changing really quickly, the only strategy that's guaranteed to fail is not taking risks. So we have to find a way to embrace risks and the occasional failure that comes with risk without jeopardizing our mission. That's why we're fostering a culture of informed risk-taking. And to support it, we have a risk management framework that helps us anticipate, mitigate, and manage risks that could undermine our ability to fulfill our mandate. It also gives us scope to do groundbreaking research and to improve our operations and business practices. Now, reputation figures prominently in our risk analysis. And reputation deserves special attention because it's essential to the success of all our work. Monetary policy is a good example of this. It is more effective when people believe that the bank could achieve its inflation target. And our credibility took years to build, and we intend to preserve it. If we take appropriate risks, our actions will stand the test of time, and even if we initially face criticism. And the most important thing for the bank to do is the right thing, not the most popular one. So to get the right answers, we need to engage with people outside the bank. And if we don't engage, we'll leave ourselves open to confirmation bias and tunnel vision. So there's another quote, this is the third and the last, that I really like. And it's just this. It's astonishing what foolish things one can temporarily believe if one thinks too long alone, especially in economics. So, does anybody know where that came from? No? John Maynard Keynes in 1935. And it's truer now than ever. And what I've learned since joining the Bank of Canada over 14 years ago is that we need to be deliberate in reaching out to people beyond our own four walls. And we do it already through consultations with the public and market participants. We also talk to about 100 firms every quarter as part of our Business Outlook survey to get a sense of what businesses see on the ground. As part of our plan, we've devised new ways to reach out. And first, we've recently launched a program in which outstanding scholars will work with the Bank of Canada researchers. And we will benefit from the injection of outside leading-edge thinking. We're also holding conferences on the most important economic and financial issues facing Canada. Earlier this year, we had a conference on disappointing global growth rates. We're working right now for others. One's on e-money, another one's on inflation targeting. And second, we're engaging domestic and international counterparts more than ever. It's important that people outside the bank understand what we're working on when it's in its early stages and not when it's all baked into policy. That's why this week we've expanded the range of work that we post on our website. We've started publishing staff research papers under a new process, and this new process is independent of the bank's governing council. These papers are works in progress that we want comments on because we want them to eventually be submitted and hopefully accepted in peer-reviewed journals. We're also publishing staff analytical notes on timely and topical issues. And that way, people can benefit from our analysis when it's still fresh. We expect that this work will, from time to time, show results that are not fully aligned with the views of the bank's governing council. That's okay. The innovation process demands that researchers have the intellectual space to explore ideas. So the third thing is that it's not all about us. The bank's culture emphasizes sharing our knowledge. A few people know that we provide technical assistance to other central banks, and our assistance spans the globe and runs the gamut of issues from economic models to banknote quality inspection to business continuity. And one area where our help is frequently solicited is in web design. Who would have thought of that? Well, it is, because our website has been recognized as the best in central banking. Closer to home, we've introduced new programs to encourage the next generation of researchers, including the Graduate Student Paper Award and the Governor's Challenge. And the Governor's Challenge is new. It's kind of exciting. It's a monetary policy competition for undergraduate students in economics, and this is going on right now. So these efforts will have a big payback for us and everyone. We learn from other central banks' experiences and from the original ideas that students have. So let me wrap up. If there's one idea that I want to leave you with today, it's this. When the world is moving around you, standing still is a risky strategy. At the bank, we put innovation and innovative thinking at the center of our strategic plan to make sure that we can navigate what's ahead. For us, innovation comes from taking a hard look at what we're doing and considering alternatives. Hubris is the enemy of sound policy. Innovation comes from involving people like you here today in our quest to find the best answers. And our commitment to innovation extends to all parts of our business. It will give us the tools to support Canada's economic and financial well-being for the next 80 years and beyond that. So, thank you.
Thank you, Carolyn. So we've got two of us in the audience with microphones. If you've got a question or a comment, just raise your hand. Tell us who you are. Tiff's going to go first.
The hard question goes first.
Carolyn, that was very instructive, and I think the bank's focus both on innovation and embracing a culture of creativity is exactly the right direction. You do get the feeling that, as you said, speed matters here, and that a lot of these areas where we need innovation, they're not 10 years out, they're not 5 years out, they're like tomorrow.
Yeah.
Banks basically the zero lower bound, new payment systems, new lending platforms are arriving, changing the transmission mechanism. So let's bring it down to something that must be on the governing council's mind. You're very close to the lower bound. Term structure's pretty flat. Canadian dollar's already moved down a lot. What are, if the economy were to get much weaker, what are the innovative, creative solutions at the bank's disposal to add stimulus were it to be needed?
Well, I mean, the first thing is that, as we said in October, the current level of the interest rate is appropriate at 50 basis points, and so we're not there yet, and we may never get there. We've got a forecast that shows growth picking up in the second half and then further into 2016. In 2009, we came out with a paper that talked about the kinds of tools that would be at our disposal if we ran out of runway in terms of interest rates, and that included quantitative easing, purchasing corporate bonds as Those are two examples. Another example is the communications policy that we actually use. We never actually did QE or any kind of asset purchases in Canada. So we have that framework. What we're doing right now is what every central bank is doing, which is looking at the experience over the last 7 years and studying it. So we're really in the studying mode right now, looking at it and thinking, well, what are the lessons to be learned for us? And that's really the stage that we're at. Now of course, it's good stewardship and good governance to do that. We did that earlier this year with our emergency lending facilities, where we updated our lender last resort policy, given what we've learned and the new regulations. And we did that not because we needed the policy, but it was just good to keep it fresh. So that's the frame of mind we're in right now.
Yes, thank you. My name is John Reason. I'm an alumnus, graduate MBA. My question is, your outside consulting, which I find interesting, for example, business continuity, what were the kind of issues that firms or other organizations are approaching you for? My mind goes to restructuring too big to fail, disaster recovery. I'm just interested in the issues you're consulting on. Thank you.
Sure. So the work I was talking about was with other central banks, and every central bank around the world is thinking about business continuity from an operational perspective. And so what that means is thinking about redundancy in data centers, as an example, how to safeguard yourself against security risk, which in this world doesn't just mean firewalls. It also means thinking about, well, how do you actually deal with a cyber risk that crystallizes. And so those are the kinds of issues that we've been thinking about as a central bank, but also working with others.
Hello, my name is Mike White. Just in terms of quantitative easing, have you done any work on what you think the limits are to a central bank printing money in terms of percentage of GDP, let's say, or there must be some boundary? Have you studied what you think it is?
Economists are thinking about what that might be. I don't think anybody has actually, nailed that answer. So you'll see that in one of the research papers that's published today that question's addressed. But my understanding of the state of that research is that those limits, in a sense, are still being tested. So, if you're following what's happening in Europe. The central bank governor of the ECB has said that he's thinking about, what's the next step, one of which could be increasing the large program that they already have. So I don't think anybody knows what it is now, which is part of the reason I said that this isn't over yet. There's still maybe more coming from some countries, but also there's the unwinding of it when it's done.
Sana Iqbal from Rotman. My question is that you spoke about reputational risk as Bank of Canada. Given the innovation and the speed of innovation that's happening currently, it's tripled. FinTech has tripled in the past 2 years, from $4 billion to like $12 billion in investments globally. When is it too early for Bank of Canada to get involved, given that reputational risk?
So what we're doing now is looking at it, discussing it with market participants, with other central banks, and trying to understand it. And you're right; it's moving really quickly. I mean, our interest spans a couple of things, and I think it's important to get involved. There's different ways, areas where we would get involved given our interest. And one is clearly getting involved to understand potential implications for the transmission of monetary policy, as I mentioned. Another one is to understand how the financial system is being rewired. And I'll give you an example about how important that is. When you think about the financial crisis that we had, I think it's fair to say, and it has been said recently, that people saw some froth in prices in the U.S., they saw subprime, but what they didn't see was how important such a small segment could be in terms of propagating risk across the system. And that was all about understanding the ecosystem, how the financial system was wired, Well, my point about changes in payments, but also changes that are more result in more peer-to-peer activity. Okay, like the lending club as an example. What they do is they rewire the financial system, which means that we need to understand how shocks or how risk is propagated throughout the system, and that's very important to us. And finally, payments is at the heart of central banking. We have a legislative responsibility to oversee payment systems, and so we need to understand the risks in those. Right now, we see that cryptocurrencies like Bitcoin are actually not currencies in our view. They're more like commodities or assets, securities. You just need to look at the price relative to the U.S. dollar trade rated index, and you'll see that why that might be. That being said, it's moving quickly, and so what we're studying is the first three things I've said, but we're also looking at who are the right agents. Is it a government agency like a central bank, or is it the private sector that should be issuing this? And of course, that's all in the very research stage. But whether or not central banks should issue e-money is part of our research agenda. And I can't tell you when from a reputational point of view, it's time to become more involved with that. But certainly the bank has a very long history of thinking carefully about things and not moving hastily without having thought long and hard about what they're trying to achieve and why they're the best ones to achieve it.
We've got 3 people queued up right around here. Go ahead.
Yeah, my name is Esther Mui. I Rotman graduate long time ago and involved in the financial sector and oil patch. With the sliding oil prices and also barriers to go to market recently, how low can our Canadian dollar go? I mean, we have seen 65 cents. We have been called third world country maybe 20 odd years ago. And what would be the optimum rate that the central bank is looking at trying to manage the economy? Thanks.
So I can imagine that question's on a lot of people's minds. What the Bank of Canada does is we don't forecast. We're not in the business of forecasting the exchange rate or oil prices for that matter. What we do in our analysis is we make an assumption about it for purposes of our projection. So most recent values, for example, in October, we assumed that the WTI would be at $45 and the Canadian dollar about 76 cents. And then we do risk scenarios around that. So what would happen if oil prices were plus or minus 10? And we do that because those variables are notoriously difficult to forecast. So if you have a good answer to that question, a lot of people could make money on it. So. But seriously, what you've touched on is a really important question for the Canadian economy right now, which is how is it adjusting to the oil price shock that we saw? I mean, in June 2014, oil was at $110, and now it's at $45. That's a big shock for Canada. It's a terms of trade shock. It means that Canadian incomes are lower, and that's going to have effects. That's partly what we're seeing now working through the Canadian economy. And what it means is that resources are going to need to move from the oil industry, which is declining right now. Investment's down quite a lot. We think it's going to be down there 40% this year and another 20% next year, and move to non-resource intensive industries like manufacturing. We see that happening. In fact, I don't know whether you have a taste for reading monetary policy reports, but we have a whole discussion of how that transition's unfolding. And what you can see is that areas of the country that are energy dependent are making that adjustment and seeing slow growth, drops in investment. They're seeing labor markets that aren't very strong, housing markets that aren't very strong. In areas of the country that are not dependent on energy, you're seeing the opposite. You're seeing pickup. You're seeing labor markets doing better. You're seeing business investment intentions to invest picking up as well. And so we see that transition happening. It's going to take a while to really feed through fully, but certainly we think that the the good part of it, where the adjustments happening in manufacturing and other sectors of the economy, will lead to growth, as I said earlier, in the 2% range next year and 2.5% the year after.
Hi, my name's Louise Hucall. The Munk School and the Toronto Financial Services Alliance recently issued a report that talked about the level of innovation between the big banks in Toronto and the fintech sector, and gave a bit of a worrisome report as to the lack of innovation is really holding Toronto back from becoming a world-class financial center that it really has the assets to make it capable of being. Does the central bank have any role in trying to influence that and move Toronto and all of Canada along in becoming the financial center that we really have the capability of being?
The Bank of Canada does not have any mandate to make those kinds of make that kind of structural advice or make any changes that would encourage that in any particular way. So I guess the answer is no. Do we have an interest in it? Do we care about a well-functioning, vibrant Canadian dollar financial system? Absolutely. Absolutely. We care about it from a financial stability point of view. We care about it from a transmission of monetary policy point of view. And so that's in part why we hold conferences, one that we're going to have on e-money, where we have these discussions and are, I guess, a leader in terms of promoting discussion. And there are others and discussions happening elsewhere too, but we see that as an important part of understanding the issue and also trying to help others understand it as well, including financial institutions.
John Garofano. I found your talk really interesting. I wanted to follow up on a thread that you mentioned. So with disruptive technology and many other aspects that are occurring more and more in our economy, we have an interconnected global economy, trade, capital flows moving all across. I think many would recognize that the coordinated actions of central banks around the world, not just Canada, but collectively helped stave off the impacts of the financial crisis. So with all of that happening, what's the role of a sovereign central bank in your view? Does all of that make a sovereign central bank more or less relevant?
I think the sovereign central bank is extremely relevant. Some of the coordination, so the central banks around the world are focused in advanced economies, I guess, just to narrow it a little bit, are focused on the monetary policy side on their domestic inflation targets, and they will take monetary policy actions to achieve those, and they have the tools in which to do that. Where the coordination comes into play, if you want to use coordination, it's collaboration, comes into play where central banks agree, though, that they're going to be innovative, they're going to do whatever it takes to, in a crisis, as an example, and Tiff, you talked about that yesterday, if anybody was at the lecture yesterday, where they agree to do whatever it takes to use the kinds of policies to stabilize their own economies and their own financial system. And at times, central banks will coordinate on cross-border activity. For example, the Federal Reserve allowed or engaged in bilateral swap agreements with central banks to provide U.S. dollar liquidity in the case that another country had a financial institution or another institution that had a need of U.S. dollars but had lost access to the U.S. dollars in private markets. So that kind of coordination is essential. We also coordinate on the international regulatory reform point of view because this is a global market. You said it. And if you have a fragmented set of regulations or inconsistent set of regulations, that certainly is not going to help the kinds of helpful flows of capital and goods and services that are a benefit to the global economy.
We've got two final questions.
Hi, Nicola Plummer. I'm a master's student at the Munk School. So you work closely with the FSB as a representative of Canada, and you mentioned earlier in your talk that an alternative future we must contemplate is one in which China is liberalizing their markets and their economy, and that transition could be bumpy. So I'm just wondering what role you see the FSB and the Bank of Canada playing in helping with that transition.
Well, what the FSB does, I think the IMF is really the institution when you think about the SDR. So they're the institution that looks at, in a sense, how to include China in some of the international monetary framework that's under their purview. What the FSB does is a couple of things, and one that I'm also involved in is there's a standing committee on assessment of vulnerabilities, and this committee spends a lot of time looking at shadow banking risks and financial stability risks in a number of countries. And in fact, I believe this year's report is published today or sometime really soon. So it includes Canada. And so the FSB spends a lot of time assessing risks and then finding gaps in international regulation or tweaks in international regulation that could be helpful. I mean, a lot of what needs to happen for China is really rests with them. It rests with them liberalizing capital flows, and that means inflows and outflows. It's also important for them to set a very stable, solid framework for their macroeconomy, to work to make sure that their banks and their other financial institutions are safe, well-regulated, well-supervised. Those are the kinds of things that they're working to put in place so that as they liberalize the capital flows, that actually goes really smoothly. So one of the things that Canada did do that was interesting, is they set up a renminbi hub, which basically facilitates the use and trade for investment, for commerce of the renminbi in Canadian dollars. And so, I mean, we did this as other countries have done as part of a kind of a natural progression in encouraging the globalization of that currency. And it also helps us because we are thinking about how to expand the trade that we do around the world with different countries.
The last question, the man with the mic.
Hi.
Over there, Carolyn.
Over here.
Oh, hi.
Hi, Mike Prue. I'm from the Munk School as well, but also had a previous career in capital markets. And first off, your talk was very comforting. I'm interested in, you mentioned financial tailwinds, and I wanted to sort of play off of the tail, these high probability, low impact events that you discussed. I'm interested if you could speak a bit more about what the bank is doing regarding these black swans or black turkeys, as far as how they are components to price discovery and price formation inside the economy a little bit more, the high impacts.
So as you know, we're responsible for monetary policy and overseeing payment clearing and settlement systems. We're not responsible for the macro-prudential tools that one would use proactively to adjust them in the face of risks, or for micro-prudential regulation that would be done by the Office of the Superintendent of Financial Institutions. So you know that. What we do instead in this area is some pretty serious fundamental analysis using modeling, using the intelligence we gather when we talk to financial institutions to assess vulnerability. So our approach is to really think first about, well, what's the vulnerability that's out there? And one that we've highlighted is high household indebtedness. And then we think about, well, what could be a trigger to make that vulnerability, to activate it in a sense. And so in this case, I'll just keep with that example, we think about, well, a big, deep, and prolonged recession that resulted in a big spike in unemployment that lasted for a long time. And then what's the risk associated with that for households, their own balance sheets, for the balance sheets of financial institutions who've lent to them, for those who've insured those who have lent to them. And we do that kind of stress test, in a sense, using our economic models to see where the vulnerabilities really are. And we sometimes, we think the analysis is good and it's relevant, we publish it in our financial system review, which we publish 2 times a year. So those are parts of the things we do. The other thing we do is we take our analysis and we discuss it in a committee called the Senior Advisory Committee, which includes the Department of Finance, OSFI, the CDIC, so our deposit insurer, and the FCAC. And we have a common discussion about vulnerabilities in that room, and we each bring something kind of different perspective, different set of data, different things we're hearing to the table, and discuss it there.
Thanks, Carolyn. Have a seat. Stephen's got some closing remarks.
Well, good morning, everyone. I'm Stephen Toop, and I have the honor to serve as the director of the Munk School of Global Affairs. First, I want to thank Dean Tiff Macklem and the entire team here at Rotman for hosting this terrific event. I have to say that I found that a really lucid and illuminating presentation, and I was particularly excited because we at the Munk School like to think of ourselves as a place to figure out the future, and your emphasis upon alternative futures, thinking about behavioral economics, thinking about governance of the world financial system, Canada's role in that, really resonated strongly with the kind of work that we want to do in collaboration with the Rotman School. So we're absolutely delighted to co-sponsor this, and I'd like all of you to join me in thanking Carolyn Wilkins for a superb presentation. Thank you.